When you look at these markets, what are you seeing?
Well, I mean, what we're seeing is a lot of overbought stocks. I mean, there's been a very hot run followed by an even hotter run towards the end of the year. Of course, if you look at the main themes, of course, rates are coming down. That's, of course, a positive. But then you've got to think about Trump coming in, and the idea of Trump coming in for the corporations is less taxes and less regulation. And that's good in theory, but there aren't that many taxes or regulations now. So it's really not going to be that much of a boost, I don't think.
And a lot of it, Phil, I mean, you made this comment, I think the last time we talked, is the market it feels rich. I think it maybe depends on where you think, earnings are going and valuations are going. But are you concerned about valuations right now?
Yeah, of course I am. I mean, realistically, valuations, which are getting towards the NASDAQ is over 30 times earnings. That's a lot. The Dow, not the Dow, the S&P is getting towards 30 times earnings. 30 times earnings roughly translates to a 3.3% interest rate. So if you're getting 4.25% in the bank or 5% in the bank, depending, and you're getting 3.3% in the market, eventually money's going to start shifting away from the market, and that could be tragic.
You mentioned also that you think that a lot of this is priced in, and when you were mentioning about regulations, people looking forward to more deregulation, you're saying maybe there's not that much more to deregulate or cutting of taxes. Do you think there's some other things maybe the market's not pricing in from the downside?
Oh yeah, of course. Because I mean, it's hard to say because it's so crazy. Because we went through this already with Trump, where he was going to build a wall and whatever, and now he's saying he's going to deport all the illegal people in the country, which is probably 20 million, 30 million people, but those people have jobs, they have homes, they pay mortgages. They're not all running around the street with knives trying to kill people or catch dogs or things like that. And when you start talking about taking people who have moved into society legally or illegally, and they're raising families, they have homes, they pay rent, you take that away and you start pulling the infrastructure apart, and things will start collapsing. You're talking about 10% of the people in the United States are basically illegal here illegally. If you say, "Oh, we're just going to get rid of 5% of them," that's still 5% of your economy disappearing. And the tariff thing is loopy. I mean, that's just going to be it's like suddenly putting a VAT on everything, which is not a good idea.
And if they do that, of course, that is inflationary. I mean, when you're putting an incremental tax on everything and all the other things you mentioned. Despite that, though, people are still expecting a Fed cut to be coming in December, maybe not as big and maybe not more following later on. But what are you expecting to hear from central banks in amidst all this? How do they navigate it?
Well, this is going to be tricky for the Fed too, because in reality, the Fed doesn't really set the bond rates in the end. In the end, the bond rates are set by the bond buyers. The people who are bidding at the auctions for the new debt are the ones that set the rate. The Fed steers the rate in a certain direction, but they can't enforce it if people don't want to buy it. So if you start tariffing and having inflation and so on and so forth, then people are going to want a heftier price for buying U.S. bonds. Currently, they're paying, let's say, 4.25% for a 10-year. But let's say the inflation goes back to 5%. They're not going to take a 10-year for 4.25%. So the Fed is then helpless. They can't just say we're going to go down regardless of what's being paid at auctions. They have to end up following the bond market. And that's why this tariff thing can be very, very dangerous, because it's going to sort of depower the Fed and make them ineffective in policy setting.